Good morning, ladies and gentlemen, and welcome to this question clip on Chapter 3, and we're going to be dealing with question 3.21. We're currently busy discussing intangible non-current assets, so this question includes most of the topics that you need to be a master of at this point. This question consists of a section A and B. In section A, we just have a theory question where they ask us in the required part to mention with reasons whether the research cost should be disclosed as an asset or an expense in the financial statements of Healthcare Plus on the 31st of December 20.9. So that's just a theory. And then for section B, the required part, they ask us to calculate in the A part the amount of the purchased goodwill of Alligator traders on 31st of December. So as soon as we know we purchase goodwill, we can write down a formula for the goodwill calculation. In the B part, show the general journal entry for Alligator traders regarding an adjustment to the value of goodwill. So this is after the original purchase of the goodwill, if necessary on the 31st of December 20.9. And then in the last instance, C part, disclose the note for goodwill of Alligator traders for the year ended 31 December 20.9. So let's quickly deal with the theory question, and then we will come back to these calculations and journal entries. We are discussing research cost. And if you can recall, for intangible assets, we can either have research or development costs. Only one of the two will be able to be accounted for as an asset after we've tested it against the requirements for an asset and the 5 additional requirements for research and development cost in the International Financial Reporting Standards. On the 10th of May 20.9, Healthcare Plus started with research to develop a cure for a new flu virus. On 31 December 20.9, that's our reporting date, the end of the financial year, the total research cost amounted to 685,000, and there was still no sufficient proof that it will be successful. Now, if you think about the definition of an asset is a resource under your control due to an event in the past that will lead to an inflow of economic benefits. Here we already seen we don't even have proof that it will be a successful process, so there's no resource under the control of the entity. So this research cost must be disclosed as an expense because you still incurred the expenses. In the statement of profit and loss and other comprehensive income, it was not a completed process and therefore does not meet the requirements of an asset. Just in a test environment, have a look at the mark allocation for a question like this. If it was only 2 marks, this will be sufficient. If it's more than 2, you'll have to meet the requirements of an asset separately and discuss it comprehensively. In section B, A part of the required, we have to calculate the amount of purchased goodwill of Alligator traders on 31st of December. So if we can get our calculation format written down, I think that will make it a bit easier. Remember, to calculate the goodwill, we compare the purchase price of the entity as a whole to the net asset value. And the net asset value is calculated as the difference between the assets and liabilities. This all happens on the date of the purchase. So have a look at the values that you use for your net asset value, that you use the correct values on the date of the purchase. If we think about goodwill, goodwill is an intangible asset. So if we can take from the purchase price all the amounts that we can link to the tangible assets or the liabilities that we already know about, what is left in this purchase price after allocating that is for the intangible asset. That's why our calculation is a comparison between the purchase price and the net asset value. So we are looking for these items, and if we read through our given information, we can earn the marks as we read through the question. For section B, the summarized statement of financial position of Crocodile traders on 31 December 20.8 is as follows. So they give us for Crocodile traders all the assets, including an amount for goodwill, current assets, and then we have our equity and our liabilities. Now for our calculation at this point, we're only interested in the assets and the liabilities. They also tell us that the depreciation for the year ended 31 December amounted to 1,500 on buildings and 32,000 on equipment. And then in additional information number 1. On the 31st of December 20.8, Alligator Traders purchased all the assets and liabilities of Crocodile Traders for 672,000 Rand. So that is our purchase price for which we can earn a mark. R672,000. Okay, this 672,000 Rand included an amount of 70,000 for the famous trademark Croaky. Now, if you look at this trademark, the reason why it does not appear in the statement of financial position of Crocodile Traders on the same date, you'll remember there's a difference between inherent and acquired intangible assets. And because this was an inherent trademark at this point, no one was willing to pay for it. It was not included in the financial statements. But because Alligator Traders is now willing to pay for this trademark, that 70,000 becomes part of the net asset value. So if I want to calculate my net asset value, that 70,000 Rand will be the first asset that I include in my calculation of the net asset value. Okay, they purchased it with the intention of expanding their business. The value of all the assets and liabilities of Crocodile Traders, as they appeared in the statement of financial position above, were considered to be fair. So I can use all of those values except for the following assets, for which the fair values were considered to be as follows. So now, for purposes of this purchase transaction, we have to change the values that we do not agree with our entity being bought. For land here, you'll see we have 100,000, and for purposes of the takeover, land is not worth 100 but 160. So we're not going to take it over at 100,000, we're rather going to take it over at 160,000. So in my calculation, I can take the land of 160,000 and add that to the 70,000 for the trademark. The next item that they changed is the value of buildings. Buildings in my statement of financial position is a carrying value included at a carrying value of 60,000, and we are going to take it over at a carrying value of 80,000. So in my calculation, I can include the buildings at a value of 80,000. Next item, the equipment is worth 96,000 for purposes of the purchase transaction. And in our statement of financial position, they have it at 128,000. So we're just going to include it at the new value, which is 96,000. Those are the only adjustments that we have to make. You'll see at the top there, they said everything else was considered to be at fair value. And on the 31st of December 20.9, the owner decided to have their goodwill valued for possible impairment. Can you see this has nothing to do with our purchase? So we can now go back to our statement of financial position and include all the other assets and liabilities that we took over in our calculation of goodwill. Because we want to calculate a new goodwill, the old goodwill that is included in the books had to appear here because of a previous purchase. So we never include this intangible asset in our calculation of the new intangible asset. We can carry on to include our current assets, inventory of 112,000, debtors control of 64,000, and bank of 16,000. Then we deduct our two liabilities from this calculation. The two liabilities is the long-term loan of 64,000 and our creditors control of 32,000. So once we've calculated the total net asset value on the acquisition of the assets and we deduct that from the purchase price, we will get to our goodwill amount of 170,000 rand. You will see in the suggested solution that there is an alternative way of calculating the goodwill where we just take the total assets, but remember these assets, that 480, is prior to the calculation of the adjustments for the sake of the purchases. That 480 excludes goodwill because we do not include goodwill in the new calculation. Liabilities of 96,000. So here they did the revaluation, which we included as an adjusted amount in our calculation. If we deduct the liabilities from that, we get the fair net asset value, and if we compare that fair net asset value with the purchase price, we get the same value for the goodwill. So you can choose which alternative works best for you. Then when we get to the B part of the required, show the general journal entry of Alligator traders regarding the adjustment for the value of goodwill. This is 1 year later. After we've calculated the goodwill, we now test it for impairment. And on the 31st of December, they tell us that the owners of Alligator traders decided to have their goodwill valued for a possible impairment loss. A management consultant determined that the recoverable amount of goodwill was 145,000. We just calculated the goodwill in the A part as 170. So to change the value of goodwill from 170 to 145, we'll have to deduct 25,000 rand. We cannot deduct it from the goodwill, but we will create a contra account, contra asset, accumulated impairment losses. And this will have a corresponding expense account in impairment losses. Which we calculated as the difference between the 170,000 rand that we calculated in the A part above, our goodwill on the purchase date, minus the new value as per the business consultant of 145,000 rand. So that's where they get to the 25,000 rand at the end of the year. Remember, goodwill does not have a useful life. It's not like a tangible asset that we can write it off for usage over the useful life. That's why the term impairment losses is used instead of depreciation. Last step in the process, in the C part, disclose the note for goodwill of Alligator traders for the year ended 31 December 20.9. Now, all our non-current asset notes have the same format. We start with a carrying amount at the start of the year. And remember to put dates in there, carrying amount on 31 December. And we end off with the same amount, carrying amount, but a year later, 31 December 20.9. For goodwill, this carrying amount is calculated as cost minus accumulated impairment losses. So the same at the bottom. And the movements during the year can either be the purchases of new entities and a new goodwill calculation, or then the impairment loss for the year. In this case, we started off with 170,000 as the cost. During the year, we have had an impairment loss of 25,000 from our journal entry at the top there. So if we had 0 impairment losses at the start plus the 25 will give me my 25,000 accumulated impairment losses at the end, resulting in the carrying amount as stated by the business consultant, the new value of goodwill of 145, which is the difference between the 170 and the 25,000. Thank you for your attention. I hope that this will be to your benefit, and we hope to see you soon again.